Happy Monday, traders. It's 8:01 a.m. Chicago time on Monday, the 11th of May, 2020. This is episode number 1752. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off, allocating to safety this morning as the market falls just under Friday or at Friday's low on the unsettling news regarding the resurgence of COVID-19 in Wuhan, China, in addition to worries over a general uptick in COVID cases globally as um, the markets across the planet begin to ease up and reopen for business. I know that watched some footage from Brussels, Belgium, where they're preparing to open store, or they prepared to open stores this morning. And I know that many different cities are easing up. I believe many have a date of May 15th or so. Um, but overall, the market's got some jitters. Travel stocks are getting hit in Europe, as well as uh, uh, as well as energy stocks. So overall, the market's allocating to safety this morning. The Russell's taking the biggest hit this morning, down 22 points, trading at 1307 or 1.66% down. The DAX is off 151 points or 1.4%. The Euro Stoxx down 40, 1.38%. The Dow's off 259 or 1.07%, and the S&P's down 31 points. The leader today is crude oil. Crude oil traded sideways for most of the session. It took a strong pop higher, went from negative to positive, trading at 24.85 in the June contract, up 11 cents or 0.44%. That's where we stand this morning. There's a lot to go over. Of course, the COVID thing also is affecting the White House. There's rumor that a very senior staff official has been found to be infected, and that's not being shared, um, or that's being kept under wraps. And so it's hard to say what the deal is with this thing, but that's where we stand in terms of the calendar and expectations. Um, this morning, quite a few numbers across the globe, but really not much to discuss. Um, uh, there's the U.S. is looking for consumer inflation expectations at 10 a.m. 10 a.m. 10 a.m. Central, 11 a.m. Eastern. Not really a high impact number. We do have Fed's Bostic and Fed's Evans at 12 and 12:30 Eastern. This evening at 9:30 Eastern, we have the Australian NAB Business Confidence. And this evening, also at the same time out of China, we have the inflation rate year on year expected at 3.6%. Uh, so and so that's where we stand currently. In terms of the review, Friday was kind of an interesting day. Let's jump into our review segment. Friday was expected. The key expectation was for us to leave this box open, to leave somewhat of a gap. I expected some support in the 2907 area, and I was looking for the market to push to 3150 right there. Be sure that if you're looking at this on YouTube, be sure to press this button here and set it to 1080p like this. Set the quality to 1080p so you can see these numbers in high resolution. If you're on the Edge Clear page looking at this, you can click on the YouTube button and go to YouTube and then turn it on if you like, if it's not coming up at high resolution already. For most of you with good bandwidth, that should happen automatically. In any case, was looking for this to stabilize an open auction and for us to push to 31 and then hold sideways and finish somewhere around the 2320 area, the high volume node in this region. That's what I was looking for. Um, and so the secondary is a push up to take out the overnight high, which was a 23, and then to push back and then bounce off of the prior day's high in the 95 region to finish somewhere near the lows, 2907 area. Here's what actually happened. It ended up really uh, pulling off a test of the prior high. It missed. We have a gap of about 3 ticks. I'm not marking that gap on my master levels. We left the gap at 3 ticks and then pushed back towards the mid, consolidated here, and then pushed to the other side. We have a double top at the opening swing high, 2911, 2911. Expect that to be taken out, was taken out, and then it pushes all the way to the other side of the opening swing low right here. That's the opening swing low, and it grabs it right there. There's the opening swing high, and it grabs it right there. Goes to the opening swing low, pushes out, and then again has a deep pullback. To me, Friday was hard to read. We continued to squeeze higher into the close as the market pushed into that targeted, under scenario one, the targeted 29.31 area, got to 29.2975. Again, I found the trade on Friday just really noisy. And tough to read. It's and when I say tough to read, it's tough to read for structured trades. There are always scalps in the markets, in my opinion. There's always a place to grab a few ticks or points here and there, and that seemed like the kind of market where we would do that. We are left with these two kind of weird looking distributions here, a very distinct low volume node at 2918. At 2918, and we are currently trading down here underneath 2900, 2898. So the overnight low got into Thursday's range. The overnight low is 2889.75. The market's looking weak. We finished near highs on Friday at what looked like an interrupted auction. So the expectation was for us to push higher on the reopen, which we did. We did a good job pushing towards 29.50. Remember last week, Monday, Tuesday, I was saying that the short squeeze is likely to come here. If you're short, be careful. It's likely to push into 2900, and then beyond there, it's 29.20, 29.50. The overnight session pushed to 29.47. And has come off quite a bit. So that's where we stand as the market pushed up. I'd love to ask you and be interactive. I don't like having a one-way conversation, but we are holding a nice channel here on Friday, but there's a clear divergence once this high was being made at 29.18. We get this reference level where the delta just kept going down. As the market finished near highs, the delta was not there. It just wouldn't participate. We saw the opposite last week when I talked about a divergence with prices moving lower while the delta was pushing near highs, and then we ended up running up the following 2 days. This move up into the close on Friday did not, it got some participation because we came off of the very low, which was around negative 10,000 delta for the RTH session in terms of volume, but still we finished pretty weak compared to the opening price. So in price, we have this to contend with, this difference to contend with from the open to the close, and then in terms of delta, we have a negative delta to deal with into Friday's close. So this push up wasn't really strongly participated. It had some large lots in it. Here's my chart that separates the delta. This is a very accurate chart using tick IDs disseminated by the MBO feed of the CME. And what it shows here is large lots. That is everybody between 10 and 99 contracts per trade was a seller. We could see that very large lots, that is 100 lots or more, were really flat. That's the yellow line, really flat through the session here. And the small lots were buyers early on, but the delta on the white, this is the great majority of the volume in the S&P is held by the um, white line, which is the large lots. That's everybody from 10 lots to 99 lots. And what we do is we combine, we reconsolidate all the fills into one order, and we're looking, these lines represent orders being filled, the size of the orders being filled, reassembled, again, accurately. And what we see here is that participation by the very large lot was pretty dead. Then it became a bit of a seller, and then there was some buying into the close, and it finished relatively strong. But overall, the large lots were sellers, and the overall delta as the market pushed up, this is the S&P Mini, as the market pushed up, the delta remained negative. That's the bars you see here, the bar chart down, the candlestick chart down below is the combined delta. So overall, it just seemed like it was really having a hard time getting the support from the participants in terms of lifting the markets. Here's the overnight session. We open back up pretty much where we closed, push back, close the gap, and we continue this auction that we left behind unfinished on Friday. This was what was expected through the Asian session. Let me change this. And then what happens is as Europe comes in, Europe opens right here. As Europe comes in, they immediately become sellers. And you probably have heard me say that a lot, where the European session is tending to reverse or sell the Asian session. That's been fairly common. And what we see in the profile here is we have really good volume, 366K for the overnight session. That's kind of heavy. But overall, we see that there's just a very jagged volume profile with a weak low. And what that's saying is the market is actively discovering prices to the downside. It is really pushing, consolidating. So we have a nice little zipper, a little spurt down, nice little zipper, a little spurt down, little zipper, spurt down a little bit, and here's a zipper at the low that's kind of bouncing a little bit. Price discovery, active price discovery is to the sell side this morning. So the market's done a good job holding these prices up here, and there's some decent volume near the highs, so giving us a point of control that's up above, but this looks weak. And the other item that I noticed is if we look at this market profile chart, these are TPOs here. These are letters representing 30-minute time slots. If I zoom into this a little bit, you'll see that the market had a nice run from 29.1875, and pushed higher into the close and came back, pushed higher, and then came back, and then the last bracket, the last 15-minute bracket of the pit close, opened somewhere in the excess and finished right here where the asterisk is. This shows a nice sprint up with a key reference level down here, 29.1875. The fact that we are opening below this area is quite bearish to me. It seems like the market is really has very clearly rejected these higher prices. Let's move on to Bookmap. Here's ctbookmap.pro. This is the overnight session. Some fairly, as I said, the volume was pretty good in the overnight session. Some fairly well lit up areas. In the overnight session, 29.50 as we would expect. This is resting liquidity. It's basically a lot of GTC orders up there. But a lot of these areas are respected. We have a collision here in the 29, 27, 28 area for a nice bounce to the zipper up here, and then we ram right through to the next area down here at 29.15, and we got a tiny little bounce, approximately 7 points or so, and we break through, come back up to where this collision occurred, and then we continue down, and here's where we are now. But if we look above and below, it seems like the auction is two-way, and it's more active on the sell side with some pretty good, don't know who that is, with some interesting pushes down, some interesting bids down at 28.75 that are lighting up as price moves lower. But overall, it's an active two-way market, and there's some pretty decent discovery to the downside. We are stuck here in between the high of Thursday at 28.95, the low of Friday, and the 2900. We're sandwiched in an area in here. We're sandwiched in an area in here where if it once it resolves, it may resolve very, very quickly. In other words, it may resolve out of here quite aggressively. So trading in this area, if we happen to open in this 2900 area, we're likely to see some pretty good turbulence at the open today, given where we are. So let's look at that from a different angle. Let's see what is expected for today. All right, so if we look at where we are now, again, we are, let me change the pen color here. Where are we? We are in this zone right here. Okay, and in this zone we have Thursday's high, Thursday's peak right here. We have Friday's low right here. We have a 2900 right in here. We have a very clear point of control above and balance. We have a nice little resistance area that the market rejected on Friday morning, and from which we sprang up. And then below us, we have this 2886 area. 2886 area, we have a naked point of control at 2880, and then we're clear down into the 2868 area. These are the key levels for today. Okay, so 2900, the 95 area, 2900. Below that at 86, the point of control, and then from there we have 2867. That's how things are. That's how things are geared up. So looking at that now, remembering these levels, what we have this morning is an area of probably very high turbulence. I'm looking for the market to respond this morning towards that 2908, push through 2900, extend, and then walk itself back towards 2920, and likely turn over and reject and cut to the other side for an overnight low grab, consolidate, and then potentially push into 2880, but that's the extent of that move. We have quite a bit of range here from 2880 2880 to 2918. That's a fair amount of range for the current volatility. That's the main scenarios. Is a grind up, sucking in more longs and likely to reject that 2917, 75, 2918 area. Secondary, we open, we push up, we push down, we attempt up, we push down fairly aggressively with an impulse, consolidate into this point of control, drift back up, and hold sideways into the session as we come back into this high volume node from the composite of this 3-day area from last week. We come back into balance basically and set up a base for the next run to 29.50 potentially. These are the two key scenarios. The tertiary scenario is an attempt lower. The third scenario is an attempt lower, is a push lower. Take out the overnight low, impulse up, come back into balance, and then squeeze into this 29.18 and resume what we were doing on Friday. Not very likely given the overnight conditions and the context of where we are. It is more likely to come back into balance and pull in more buyers before it can push up for the next leg. The overall trend, as you saw last week, is higher lows, which means we're one-time framing up. We're one-time framing up, and that may be broken today. And if it is, and because we finished below that 29.1875 I showed you on the market profile chart, to me it looks weak, and that's the reason for scenario one. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Take care.